This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your source for the latest Iowa ag news headlines right here in the heart of the heartland. With reports from our award-winning team of Dustin Hoffman, Riley Smith, Mark Magnuson, and Andy Peterson. Now, from the IARN studios in Des Moines, here's Riley.
Good day and welcome back to Ag Matters PM on the Iowa Agribusiness Radio Network. I'm Riley Smith. Very glad that we can have you all back after the long Thanksgiving break. We are excited to bring you even more ag news content. In today's episode and later on, we will have Robin Schmahl of agmarket.net. Starting off, though, I have Tony Jesina. He's the Senior Vice President of Insurance with Farm Credit Services of America. I had the chance to visit with him at the National Association of Farm Broadcasting Convention in Kansas City. We had a chance to kind of get an update on the farm economy heading into 2025. Tony, thank you so much for taking the time to visit today. Obviously, right now, the price situation looking a little different from where it was 10 years ago. Economically, how are we looking right now for those farmers?
Yeah, Riley, you hit it right on the head. I'd say it's mixed. A year ago, prices were much better than they are today. The trend's not our friend. And so it kind of depends a little bit on, it's really individual as far as the impact on the producer. Some producers have a low cost of production, and some had a phenomenal year for yield, so they kind of busheled through things, so they're actually looking pretty good. We got some other producers that maybe had grain on the balance sheet and didn't sell it at those prices. Maybe they took a little bit of deterioration, some erosion there. And then if you had kind of a below average crop, and then obviously the price piece. So you've got some producers that are looking at a break-even year. Some, like I said, had a good year, but some are going to have a loss this year. So it's a pretty mixed bag.
Yeah, and we've seen those varying yields, especially as harvest data comes out in general on bumper crops. So we're looking at supply being there. Obviously, there's been a lot of risks, though, when it comes to that. So when we're looking at those risk management strategies for those farmers, marketing their grain, protecting it to make sure those prices are where they need it to be, what advice do you have? What are some tips and tricks to make sure they're securing that price?
Yeah, Riley, a couple things. Number one is, first of all, you need to understand your cost of production. So you need to know, at these prices, is it profitable for me or not to sell it, whatever the market's giving you at that particular moment. Second thing is understanding what's my safety net. So does my risk management plan cover my costs or not, or is there a gap? Okay, and if there's a gap, are there some other levers or tools I can use to bridge that gap? And then the last thing, Riley, is looking at, the opportunity side. So if I've got a good plan in place, and the market gives me opportunities in 2025, even before harvest, take advantage of those. If you have a good plan behind you and you got confidence in your guarantee, then you should be able to take advantage of those opportunities if and when they come up. So you can take some profit off the table, put some money in your back pocket, not wait, for another year to see how things kind of turn out and having to hope for the best.
And then, looking at that risk management scenario, we're going through a lot of change right now when it comes to the economic scene. To navigate those changes can be a little stressful sometimes. And you mentioned right there some tips and tricks of managing that risk. Just in general, navigating that marketplace can be difficult. So what are some of the ways that they can make sure that they're not getting overwhelmed with all the marketing that goes on with their grain?
Yeah. So a couple things. So I'm going to talk about the risk management side first, yes, and then the marketing piece. It can be overwhelming. We've got, if you look at all the possible plans and combinations, like in Iowa, there's, for corn, you could have over 2,000 options available to you. And so that's a lot to digest. And so don't get overwhelmed. Work with someone that's got tools to help you kind of sort down and solve for what you're trying to solve for. And then the second thing I would say when it comes to risk management is, if you look at what was in each county, the most common policy that was purchased in 2024 won't cover your cost of production in 2025. So you got to think differently. So what got you here won't get you there. So you got to be creative and look at, are there other things I can do? Do I need to increase my underlying coverage level? Or for most producers, what they're going to do is take advantage of some of the other plans that are available to add on to the top of that. For example, like supplemental coverage option or ECO, the enhanced coverage option. RMA just increased the subsidy for that going forward. So in a sense, it's on sale. So think about that's an input cost that guarantees you revenue and it's subsidized. So take advantage of that. So that gives you a better chance for that safety net. So from a marketing perspective, you still got a crop to market. So you got to manage basis. There's a good crop, and unfortunately, we're also at the whim of other markets, like what's happening in South America and things like that. So basis risk, you need to manage basis. So you got your actual physical commodity to manage, but also look at 2025, and if and when the market gives you opportunities, be willing to understand what those opportunities are and pull the trigger if it gives you a chance to lock in profit. So anytime you can lock in a profit, it's not a bad thing.
And then a big part of that is just communicating with your agent, especially farm credit side of things. Communicating with your crop insurance agent when it comes to that conversation. I know some people can feel a little like, what do I say? How do I make sure that I'm getting the things that I want? When it comes to that farm credit side of things on that conversation, how are they making sure that the farmer's at the center of that conversation?
Yeah, absolutely, Riley. So first of all, you need to look at your risk management partner and your lender. Those are your partners, okay? And so you got to be willing to work with someone that's willing to have a frank conversation with you. So it's, you got to understand what are the problem we're trying to solve, and then help me get there. And so again, from a farm credit perspective, we've got tools that we can take the customer's policy and help you make a data-driven decision. So it takes the emotion out of that. It's like, if these are your gaps, here's ways to solve that. And so here's the data. And then you can make a more informed decision. And so you got to work with someone on the insurance side that understands that, has tools to help you, because like I said, it's a lot to navigate through and to sort through all that kind of chatter, if you will. And so get down to really what matters most for your operation, what helps you sleep at night, to give you confidence to sleep. At the same time, we're kind of a unique situation that we're also a financial services company. So work with a lender that understands that impact. What is my cost of production? What's my working capital? So what is my risk-bearing ability? And so between the three, between your lender and your crop insurance agent and the producer, hopefully you can be more informed about what are my risks and how can I manage those.
All right, Tony, lots of great information today. For any of our farmer listeners and viewers who would like to get in touch with Farm Credit, how can they do that?
Yeah, it's simple. Just 1-800-884-FARM. Reach out to your local Farm Credit office. We've got a team of experts willing to help you. And it's been more critical now than ever to reach out to someone that really understands this space really well. There's too much at risk.
Tony, lots of great information. Thanks again for taking the time to visit with us.
Yeah, thanks, Riley. Appreciate all you do for the industry, too.
That again was Tony Jesina, Senior Vice President of Insurance with Farm Credit Services of America. We'll take a look at the closing markets next, but first, here's a word from our sponsor, the Iowa Soybean Association and the Soy Checkoff.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net.
Welcome back to Ag Matters PM, and we're taking a look at the closing markets now with Robin Schmahl of agmarket.net. First off, Robin, what do we see going on in the grains today?
Well, we didn't see a whole lot going on in the corn market. It seemed to be, after a post-holiday trade, just kind of back and forth. We did see export inspections in the middle of the range at 935,854 metric ton. Nothing really exciting there going on. A little bit more pressure in the soybean market. Good rains in Brazil over the weekend. And there were some estimates released. Agro Consult projects Brazilian bean production at 172.2 million metric ton. Now, they're not alone in that. There was another firm, Conab. They were looking at 166.5. Now, that was quite a bit of difference between what Agro Consult was. USDA is at 169 million metric ton, but there was another Solaris analysts at 170.8 million metric tons. So we've got two reports that came out that are pushing Brazil's soybean production over 170 million metric ton. Now that would be quite a bit higher than the previous record of 162.4 million metric tons. So that puts some pressure on the market, even though it's not realized yet. But the psychological aspect of that, but the pressure wasn't very great. We had really good export sales, or inspections, I should say, not sales. Inspections at 2.088 million metric ton was to the top end of the range. Now, wheat suffered in the deferred contracts. The front month December was up nicely, and that was because we're not seeing deliveries as much as was anticipated. So they showed the strength, but deferreds were lower, export competition. So not a lot there, kind of in line with the corn market after the early December, or the front month December contract, which is in deliveries right now. Now, 94% of Brazil's corn is planted. 91% of the soybeans are planted. That's the quickest pace since 2018. So that puts a little bit of pressure on the market. However, China has expanded their imports because they want to get ahead of the possible tariffs that would put on ahead of the Trump administration. Now, Trump has also threatened 100% tariffs if the BRIC bloc of nations, which is Russia, Iran, China, South Africa, Ethiopia, and Saudi Arabia, act to undermine the U.S. dollar, there's been things that are happening to look at doing that. He's threatening 100% tariffs on that. So we'll see how that all pans out. As it gets to that point, those are a lot of uncertainties at this point in time, but that will keep the market a little bit more on the, if you want to say, the off foot as we move through the month of December.
And then looking at the livestock side of things, how have cattle and hogs traded, and what are we expecting to see from any further holiday demand?
Well, cattle took a little bit of a setback today. No, we did see strong cash last week. $4 higher in the south, $5 higher in the north. The market was overbought, so feeder cattle led the charge lower today, $2 to $3 lower. That was not unexpected. Demand had been good for beef. We saw some good, strong box beef prices the last 2 weeks. Early midday prices were stronger again, with choice up $1.33, select up $2.46. There's some anticipation that the beef demand should hold pretty well as we move through the month of December. However, exports are maybe starting to see some impact from the higher prices, and that we saw on the export sales report that was out on Friday, but that is having an impact on trade today. So the higher cash is factored in. Now they're looking forward to how is our demand going to continue as we move through December. Of the cattle purchased last week, 31% were purchased for deferred delivery. So that's going to put packers in a little bit of driver's seat this week. They may not be quite as aggressive as they had purchased quite a bit ahead. Now, on the hog side of it, hogs again pushed higher today after a little bit of a setback on Friday, which was probably due to lighter trade. Cutouts were up $2.95 at the midday report. We didn't see cash change based on packer confidentiality. So we'll see where that will come out, maybe on the afternoon report, or we'll have to wait till tomorrow. But hogs seem to be enjoying good demand up until the holidays, and is expected to continue as we move through the holidays. And that's why funds are defending their positions. And any break in this market seems to be a buying opportunity.
All right, Robin, lots of great information today. For anyone who would like to get in touch with agmarket.net, how can they do that?
They can call me directly if they would like at 877-256-3253, or they can go to our website, agmarket.net. There's an 844 number there. They can call. Somebody will pick up the phone and be glad to answer their questions or to help them.
Great talking with you as always, Robin, and we look forward to more marketing analysis soon.
All right. Thank you. It's always a pleasure to be on.
That again was Robin Schmahl of agmarket.net. We'll take a look at how the numbers close through the market window at iowaagnet.com. December corn up 1.5 at 424.5. January soybeans down 4 1/4 at 985 1/4. December soybean meal down $3.70 at $283.40. Soybean oil down 34 cents at $41.27. Chicago wheat up 5 1/4 at $5.37 1/2. Kansas City hard red wheat up 3 even at $5.23 3/4. Minneapolis spring wheat down 10 3/4 at $5.61 3/4. December oats up 11 even at $3.48 1/2. On the Merc, December live cattle down 45 cents at $187.52. January feeders down $2.62 at $256.85. December lean hogs up $1.15 at $83.22. Pork cutout up 20 cents at $92.50. And December Class 3 milk up a penny at $18.53. And that's been a check of the markets here on Ag Matters PM. That also brings us to the end of today's episode. You can find all of our content on our website at iowaagnet.com. Also follow us on social media at Facebook, X, LinkedIn, and TikTok, and find our video content as well as previous episodes of AM/PM on our YouTube channel. Don't forget to subscribe and hit the notification bell to see when those videos go live. And as always, check out our free morning, midday, and closing market podcasts, as well as the Iowa Ag Matters podcast and Pods of Potential, which just recently released its 14th episode. Again, you can find those on our website at iowaagnet.com or on your favorite podcasting service at Apple, Amazon, Spotify, and Podbean. From the Iowa Agribusiness Radio Network studios in Des Moines, I'm Riley Smith. On behalf of Mark Magnuson, Andy Peterson, and Dustin Huffman, we thank you for watching. This has been Ag Matters PM.